This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. India has cut its tax on crude palm oil, CPO, imports to 5% from 7.5%, the government said in a notification, as the world's biggest edible oil importer tries to rein in local prices of the commodity and help domestic refiners and consumers. The reduction in the tax, known as the Agriculture Infrastructure and Development Cess, AIDC, will widen the gap between the CPO and refined palm oil import duties, effectively making it cheaper for Indian refiners to import CPO, industry officials told Reuters. The tax cut came into effect on Sunday.
European banks are providing billions of dollars of funding to expand oil and gas production, a report on Monday showed, despite International Energy Agency guidance against new facilities in order to slow global warming. Last year, 25 of the region's leading banks collectively provided $55 billion to energy companies planning to expand oil and gas production, Responsible Investment Nonprofit Share Action said in the report. Although that marked a fall from the $106 billion lent in 2020 and $83 billion in 2019, it was above the $49 billion and $50 billion amounts in 2018 and 2017, respectively.
Moving on to the top news in the energy sector.
Oil eased on Monday from its highest in more than 7 years as Ukraine hinted at possible concessions to Russia that could alleviate tensions between the two countries that Western governments say are on the brink of war. Brent crude was down 60 cents, or 0.6%, at $93.84 a barrel by 1440 GMT after touching its highest since October 2014 at $96.16. U.S. West Texas Intermediate, WTI, crude fell 47 cents, or 0.5%, to $92.63 after hitting $94.94, the loftiest since September 2014.
EU antitrust regulators are likely to intensify information gathering on Gazprom's European businesses, said a person familiar with the regulators' thinking, amid Europe's gas supply crisis. Last month EU antitrust chief Margrethe Vestager said she had asked gas companies including Gazprom about tight supplies after accusations the Russian giant was withholding extra production that could be released to lower soaring prices. Gazprom denies such allegations.
Next, we have the top news in metal markets.
Aluminium and nickel prices climbed towards multi-year highs on Monday due to escalating fears that reduced supplies from Russia would exacerbate existing shortages of both industrial metals. A Russian invasion of Ukraine could mean sanctions against Russian firms which include Norilsk Nickel supplying about 10% of the world's nickel and Rusal accounting for around 5% of global aluminium supplies. Russia has repeatedly denied it is preparing to invade Ukraine.
Second-half results from the Australian mining triumvirate of Rio Tinto, BHP and Fortescue are likely to draw a grim picture of a sharp drop in iron ore prices and demand from top metals consumer China. Half-year 2021 earnings at Fortescue, a pure-play iron ore miner, will likely drop by roughly a third, while 6-month profit growth at more diversified, larger rivals Rio Tinto and BHP is expected to be knocked down. Prices of the steel-making commodity halved from record levels over the December half as China's push to curb emissions and easing construction activity in its debt-laden property sector curtailed demand, and analysts contend they will remain way off last year's peak for some time. We will now look at the top news in the agricultural sector. Chicago wheat rose on Monday on concerns that a possible armed conflict between Russia and Ukraine could disrupt wheat exports via the Black Sea. Soybeans fell from 9-month highs seen last week as traders awaited more news about the impact on trade flows of dry weather which is expected to reduce crops in South America. Corn also fell. Chicago Board of Trade most active wheat WV1 was up 0.4% at $8.01 minus 1/4 a bushel at 12:04 GMT, after climbing to its highest since January 26 at $8.13 minus 1/2 earlier on Monday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.